Assalamualaikum friends. Welcome to question number 9 of SBR. So, as you can see, we have been given the financial extracts of the two companies. And so, as you can see from the subheading, even though I'm not reading the whole case study, you know what it contains. One is loan to charity. Then we have restructuring plans. We have accusation of park. And before I read the case study, let us go to required. Okay, as you can see, there are 4 requirements. Under A, there are 3 and then B. So requirement A is discuss with suitable workings how the loan to the charitable organization should be dealt with in the consolidated financial statements for the year ended 31st May 2003. So the first part is only about the loan to charitable organization. You see, each subheading you can use for each requirement. That's the beauty of the way the question has been structured in SBR. Okay, loan to charitable organization. Suitable workings, that means not only discuss, you have to do calculations also, because this will go in your consolidated financial statements, and it's for 6 marks. Next is discuss how the restructuring plans should be dealt with in the consolidated financial statements for the year ended. This is about restructuring plans only, same how it will be dealt in the consolidated financial statements. Now, one thing, when it's in the group accounting, we know in SBR the first question for 30 marks is on group accounting. That means consolidated financial statements, definitely you will get, no doubt. So that means basically the question will be asked how an item is treated in the consolidated financial statements. That item could be any item. That's why even it is group accounting, you should know all the standards in question number 1 for 30 marks. Okay, you should be able to know all this standard, because any standard can come up that you need to apply in the group accounting. For example, it could be restructuring plan, it could be your uh, pensions, right, employee benefits, it could be financial instruments, it could be your non-current asset, it could be your intangible asset, it could be your impairment, it could be your anything, any item, it could be your income tax. So each one of the items are dealt using different standards. In short, all the standards you have to know, and you might have to apply more, and you have to apply, not might, it is always you have to apply more than one standard. So don't think that because question 1 is for 30 marks only group accounting, so I will only use consolidated. I just have to make consolidated income statement and statement of financial position, and that's it. No, that's not it. Okay, even if it's for small marks, it will be asked. Okay, like here how they have asked 6 marks, 5 marks. Okay, one is loan to charity, the other one is restructuring plan. So for restructuring plan there's a different standard, for loan to charitable there's a different standard. All the standards you have to know to apply here, right? Restructuring plans is dealt under which standard? If I ask you now, how will you know if you have not gone through all the standards, right? If you have missed out even one, gone. So it is IS 37. Okay, provisions, contingencies, and all that, because under provision restructuring plans come, so it's dealt under IS 37. Okay, now the third part, prepare the equity section of the consolidated statement of financial position as of 31st May 2003. All the dates are 31st May 2003. Okay, so there is no some, the reason why I'm highlighting the dates is sometimes if you see some dates, they might ask you different dates on different things. For example, loan to charitable might be on different day, restructuring plan might be on different day. Here they have asked on the same date. Okay, sometimes you have to make from a number of years, multiple years, not just 1, 2, 3 years you have to make. There are questions like that also, but here the good thing is it's just for 1 year, 31st May 2003. Okay, that is the current year. Path, I want to take you through the third part of A. They asked equity section. Only the equity section you need to prepare. Please don't go and prepare the whole consolidated statement of financial position. This is the biggest mistake a student could do. Okay, equity section, and for the equity section the marks is 12 marks. Okay, coming to part B. Okay, for part B there's a separate paragraph, a 4-line paragraph that you can use for part B. Okay, to answer your part B, that is NCI at fair value. Okay, but we'll come to that later. Now first let us tackle A. Okay, since there's a separate requirement, paragraph for part B, that shows that you don't need the previous paragraph to answer part B. It's only relevant for part A. Okay. So now let us go to the case study. Okay. Now you have this option. Okay. Most of the candidates ask me that how to answer an SBR paper. Okay. From beginning, they don't know how to start. When they see a question, they get confused, right? And before I even start, I want to congratulations to all those who have passed SBR and also your other ACCA papers. Congratulations. And also I want to uh, say to the ones who have failed this time that this is not your last time and this is not the end of the world. Do not lose hope. There is always a hope and you can always try better and come up with better. Okay. So if you have failed, remember you can always improve. Okay. So starting on a good note on that, let us go. Okay, so a question, when a question is asked like this, when you have different requirements, different paragraphs, how do you start? This is a good question, nice question. Okay, you can proceed a question in a multiple of ways, different ways. Some candidates do it in their way, some candidates might do in their own ways. Everyone does a question in a different way. I don't know what is your style. Okay, so this question now you can, some of you might read the whole case study and then start answering one by one requirements. It's like A to Z, you will read the whole paragraph and then you will answer one by one. It's also okay if you have highlighted and done your annotation, everything is okay. But that is, I say that that is not the most suitable the way of doing it. The reason is because by the time from your first paragraph to your last paragraph, when you read, especially here, if you see, you are reading loan to charity, then you are reading restructuring plans, then you are reading acquisition of park, then also you are reading the part B, also the 4 lines, you will get confused. You will forget half of the things. Trust me, not half, 80 to 90% information you cannot retain, you forgot. And especially under the exam scenario, you will be panicking, you cannot focus. You will forget information. The main information you will forget. By the time you come to do the requirement, you will be thinking, where was the NCI? What is the favor of NCI? What did I just read? Again, you will keep on rereading it, wasting time. So what I used to do when I used to solve SBR, uh, when I used to go through the case study, I just used to skim through. Skim through means I don't used to read the whole case study first. First, I always read the requirements, but before reading the requirements, also I skim through the case study. Like let's say I just read the subheadings of each paragraph, because reading at the subheading gives me an idea that what each paragraph is all about and wh- uh, and I know which paragraph is for which requirement. I can link by looking at just the subheading. So that's enough for me, even if I don't have to read everything in detail. So that's one very key point I want to note here for SBR students. That's a very good thing for you. It's helping you. Okay, the examiner is helping you by doing this way. Imagine if everything was without a paragraph in one paragraph, 2, 3 pages, you'll be confused which one is for what. But here it's very clear. First paragraph is loan to charity. So we need this for our first requirement. Next we have restructuring, that is for the next requirement. Third one is about accusation and all. You can use it for that. Okay, so now that was the first loan to charity. So I used to read a paragraph and whatever the requirements is there for that paragraph, I used to answer those requirements based on that paragraph what I have read. This helps me because I already know that I'm focused in loan to charity. I'm not confused with other piece of information. I will not forget because it's just 5 or 6 or 7 lines, only this much. So that also helps, and it also improves my speed. Okay, so this is the technique I use. You can use either of the two techniques, whatever is suitable to you, and then go ahead. Okay, I'm going to go by the second because I prefer that is more better. Okay, next is restructuring plans. So this is for the second requirement and the acquisition of park. Okay, which is definitely for the third, because for equity section we need the accusation and all. Okay, So now I'm just going to see this piece of information I don't need to use because it's just the financial statements, extracts of financial statements. Okay, these are numbers. So I'm going to read only the loan to charity. Okay, Trailer has made a loan of 50 million to a charitable organization for the building of new sporting facilities. How much? 50 million. Always the amount. Highlight the amounts. Okay. The loan was made on 1st of June 2002 and is repayable on maturity in 3 years' time. When was it made? 1st of June 2003. And you have to make the financial statements for 31st May 2003. That is just a year. But here it is for 3 years. Okay. So always make note the starting of a loan and the end of the loan. And when you actually have to make it. Like if it's in the current year, because you have to make for 31st May 2003, how much it will be in the consolidated financial statements. So you need to deal with the amount which goes for 31st May 2003 and also for the later years, how it will be treated in the current year. Okay, because it is for 3 years. So it was made on 1st of June 2002. Okay, and it is repayable in 3 years' time. That means 31st May 2005. Okay. So the interest rate, now the interest is 3%. But trailer says that an unsubsidized rate for such a loan would have been 6%. Okay, unsubsidized. Unsubsidized might be 6% because this is subsidized, no? So loan to charity. So loan to charity and all, definitely it will have lower interest. So the first interest payment was made on 31st May 2003. Okay, definitely because after a year from 1st of June 2002 to 31st May 2003, 1 year. After 1 year only you start paying interest. Trailer initially recorded a financial asset of 50 million. What did he initially recorded? Financial asset of 50 million. It was a loan of 50 million, but he recorded it as a financial asset of 50 million and reduced this by the interest received during the period. Reduced by the interest received. The loss allowance has been correctly dealt with. Correctly. Okay. What is this loss allowance? Okay, the financial asset. Under IFRS 9, we know what is loss allowance and all. Okay. So if some of you want to clarify it more, you can go to IFRS 9 and check it out. Okay. So next is restructuring plans, which I don't need to read. Now I'm going to the answer. Okay. I'm going to the answer. Okay. So before I solve the answer, let us read what the key answer tips is. So from first part to second part of here require you to discuss the treatment of financial reporting issues. This is like a key. This always will be asked from you. Treatment of financial reporting issues. One is restructuring, the other one is loan to charity. These two are financial reporting issues. How do you report it? Okay. Keep an eye on the clock, otherwise you will not have enough time to make a design attempt at the rest of the question. Third part asks you to present the equity section of the statement of financial position. The easiest way to do this would be to use the standard working for the consolidated statement of financial position. Standard workings for the consolidated statement working 1 to 5. We'll see. Okay. Don't forget about the adjustments you have proposed in your answer to the earlier parts of the question. What does it mean? Adjustments that you have made in the earlier parts of the question you will need in the third part of A. It's linked, it's interlinked, and you have to do in that order. That's why I always say do it in order, do the requirements in order. Okay, because sometimes you need the previous answer to do the second one, to do the current one. That's why. So show all your workings. This will enable you to score highly even if you make a few mistakes. All your workings should be shown. Even if your final answer is wrong, don't worry, only 1 mark you will lose. But for a final answer, sorry, for the workings you will get marks. Part B, you need to talk about the impact of NCI measurement on the calculation of the goodwill. We know that when there are two ways of measuring NCI, and when NCI measurement is different, goodwill also will be different, right? Because we need goodwill in the calculation of goodwill, NCI in the calculation of goodwill. Okay, arising the acquisition date as well as the impact on the goodwill impairment review. So even the goodwill impairment review. Okay, so it's all about goodwill and all. Now coming to the first part, how do you answer this? Okay, I am explaining you this question from very basic level, from very beginning. If you are very new to SBR and you don't know the layout, and maybe SBR for the most of the candidate, this is the first paper they go through and they struggle a lot, trust me. Okay, so for the ones who is expert, please bear with me that I will go a little slow because it's very important for those students who are struggling with it. Okay, we have to think about those people. I have to keep about those people in mind and I have to proceed. If I want, I can finish this video in 30 minutes and or less than an hour, but I don't want to do that. The thing is, everyone in whatever category you are, expert or pro or average or below average, should be able to understand this. Okay, so on that note, uh, okay, so the first time when you come across a question like this, any question in SBR, how do you start? You start by writing a subheading. Always your answer has to be written by writing subheadings. It's a key in SCCA. Okay, any paper, subheading. Subheading, paragraph, these two things you have to keep in mind. Your answer has to be in paragraphs and your answer has to be with a subheading. Okay, so how do you decide on the subheading? It's very simple. Okay, you can use the exact subheading as they have used this one, this subheading. For example, this could be a first subheading for the first requirement. That's a very good thing. If you don't know how to put a subheading, easiest way, just look, go to your case study and see what subheading they have put, and you can exactly copy paste that subheading. Okay, this is one of the easiest way. You don't have to remember anything. If you want, you can change the subheading also. There is no issue. But who would do that, right? Thinking and wasting time in the exam. So now, loan to charity tutorial note. What is this tutorial note? These things are not there in the exam. Tutorial note is given for your understanding. Remember, the answer which is published, the answer which you are reading now, it is more lengthier than it is actually required in the exam. The reason is because examiners know that students are going through this answer. They need it for study purpose. Everything you cannot study through textbook. Textbook is more simpler, simplified version. So they put everything, whatever is possible in this answer. Okay. So don't think that I have to read this much. How will I read that? It's okay. What you need to know is you need to understand how to what are the important things and how to write it. Okay, important things needs to be written. The way you write it would be completely different from theirs in your own words. So don't by heart copy paste dicto from what they have written. It's impossible that you can. There are so many questions. I mean, see, the revision kit is I think around 70-80 questions are there. How much can you memorize? Memorization is not the key. Okay, you will just stress out and you will burn out at some stage. So let us read the tutorial now. The loan is a financial instrument because Australia has a contractual right to receive cash. Please understand whether the loan is a financial instrument also or not. That you need to understand first before you even tell that this is the right treatment or wrong treatment. Okay. So here they are saying yes, the loan is a financial instrument. Why? Because they have a contractual right. It's a financial instrument. Sorry, I'm sorry. Wait, I was supposed to hide. Okay, so financial instrument because they have a contractual right to receive cash. Okay, under IFRS 9, we know that when a party has a contractual right to receive a cash, it's a financial instrument. That loan. That's why it's a financial instrument. Through that loan, they have a right to receive cash. Okay, you're getting what I'm saying? So this, uh, for a candidate who does not know, this is the first question you're attempting. Let's assume. How do you answer this question? Where did you start? What is the starting point? Starting point is look at the standard. Always the starting point is the standard. Which standard is applicable for this? Okay. Sometimes it's one, sometimes it's more than one. Just give me some time. I need to go through this. Okay. It looks like here is only one standard. Okay. Sometimes there are two, three standards. Sometimes it's just one single standard. Okay. So looking at the marks, it's just 6 marks and it's loan to charity. They're talking it's a financial instrument, so it's only one standard which is applicable in this question. It is IFRS 9 financial instruments. Okay. So if you see here, it is IFRS 9. In case you forgot what is IFRS 9, like financial instruments, if you don't want to write, it's okay. You can just write IFRS 9 says. It's enough. But another thing, if you forgot the number, it very rarely happens because you must have practiced it many times, so you know the standard number by heart. You know it. For example, suddenly if I ask you what is IS 16 or IFRS 15, you will be able to tell me because you have practiced it many times. It is there in your subconscious mind. So even if you didn't memorize, it will be there. But let's assume the worst case scenario you forgot the number, then don't make the mistake of writing the number. Don't even take a chance because sometimes you want to write IFRS 9, but rather than writing 9, you thought maybe it's 10. So you wrote IFRS 10. Now we know that IFRS 10 stands for some other standard. Okay, or IFRS 8. So you're confused whether it's 8, 9 or 10. Or let's say you're confused between 9 and 10. So you wrote IFRS 10, but you are explaining the concepts of financial instruments. You're explaining the concepts of IFRS 9, but you wrote IFRS 10 by mistake, let's say. Don't do this mistake. You will lose a lot of marks. Why? Because IFRS 10 is a different standard. It deals on different things. Okay. So in that case, don't write the number. Okay, you can just say according to the standard of financial instruments, it says that this has to be treated like this. That in that way also you can write, but don't write that number if you forgot. Okay, but I always suggest that remember numbers. It's going to be helpful because anyway you will be there in the job sector. You need all the standard. Every time you can look at the book. Okay, this is the standard. This is the standard. You need to remember all the standards. Okay. So I always recommend that you remember the number. Let's say in case because sometimes it happens. So many standards. You might forget one, two standards here, there, the numbers and all. You remember the facts, but the number you forgot. You're confused between whether it's 32, 33. It happens. It happens. I still get confused between IS 38 and IS 36, impairment and intangible assets. So it happens. I can understand. Right? So be aware and be careful of it. Okay? That's what I want to warn you. So IFRS 9, first standard. Now, starting point in SBR. Anything you want to explain, start with the standard. How do you start with the standard? Because there are so many things under standard. Student might ask me, right? How do you, miss? How do you start? What do I actually need to write in that standard? It's very simple. You have to see the case study. In that case study, what is most applicable under that standard? That part only you need to explain, not everything of the standard. IFRS 9 has thousands of rules talking about financial liability, talking about financial asset, all those things. Do you need to explain all those? Is it required? Financial liability, not required. It's not required. You don't have to explain all this. Then what do you need to explain? You need to talk about financial asset. How do you understand what you need to talk about? Look at the keywords. It's there in the requirement itself. Then the requirement is there in the case study. The words are there. You have to pick up those words. So the word says financial asset. The requirement didn't tell you IFRS 9. No, it will never tell you a standard. You only have to think and know. You have to know that okay, this standard is for this. That is the key in SBR. If you are not able to link the correct standard with the correct thing, then your treatment will be wrong. Okay. So IFRS 9 and under IFRS 9, okay, we have correctly identified this IFRS 9. What is the next thing? Next thing is what to write. Talk about financial asset. You have to talk about financial asset. How financial assets are measured. See, under every standard, only three things are asked: how it is recognized, or how it is measured initially, subsequently, and how it is recognized, or how it is disclosed, how it needs to be disclosed, how it is recognized, how it is measured, how it is disclosed, or how it is to be presented. So these are the three areas only a standard could ask you. Okay, that's it. Any standard, how it is measured, how it is recognized, how it is presented or disclosed. Okay, so here, what do you need to write? What do you have to write? Financial asset. So your word is financial asset. So from there you can build up. Now you know IFRS 9, financial asset. Like this, pick up words. Okay, this is for the initial level students who are the beginner level. IFRS 9, uh, financial asset. Now you link to the two words. Now you know how financial assets are recognized or measured under IFRS 9. Understood? So this is the thing which you need to answer. So if you read the first sentence, IFRS 9 financial instruments says that financial asset, what is the word? Financial asset should be recognized initially. Should be recognized. You have to now. There are another thing which you need to keep in mind. When you recognize, you have to write the word recognize initially or recognize subsequently. Okay, because we know the value changes. In the beginning is something else. Later, it will be something else. Okay, so financial asset should be recognized at fair value. These are the four keywords I've underlined. Financial asset, recognized initially, fair value, and IFRS 9. Four keywords. The name of the standard IFRS 9, then the item, the subject of the sentence financial asset. Third, recognized initially, and fourth, fair value. Recognized at what? Fair value. Now you understood? All SBR answers are like this only. Same way you have to answer. There is no different. There is no different to it. Okay? So it should be recognized at fair value. How do you recognize at fair value? Under IFRS 9, when you go through there, it says that financial assets should be recognized at fair value. The standard says, not me or you. It's not from your own opinion or something else. Never give answers from your own opinion. It should be measured at cost. It should be measured at this. No. In case you forgot, let's say you forgot under IFRS 9 what it is measured at least you can write financial assets should be recognized initially at, okay, that what might change, but still you will get marks for identifying the correct standards and all. Okay, because some of you might go and write cost, recognize initially at cost, or recognize initially at market value, anything, you know. See, IFRS 9, okay, most of the item if you see, fair value is also there. Okay, another thing is most of the standard has fair value in it. Fair value has a separate standard now. So fair value that, so now how do you go to the next line from here? You told, okay, financial statements are recognized at fair value. You need to use another standard here, small standard. What is it? IFRS 13. So this is your second line which you need to build up. Okay, the second sentence you start from here, fair value. You stopped at fair value full stop. After that you are talking about fair value. Fair value is measured using different standard. Now you have to bring out that standard also. So this is your second sentence. You see how I'm going from one line to next. There is a connection, there's a link. My second sentence will always be connected to the first sentence. It is not totally independent sentences. That when someone is reading, they can make sense out of it. Your sentences when you write should not be something that some first sentence is saying something else, second sentence is saying about something other than that, which does not, they do not have connection, they do not make sense. So do not write. Okay, and when you write it also, sorry, when you type it, you yourself have to read it to yourself and see, okay, is it actually making sense? Am I able to understand? See, if you are all able to understand, others also can understand. You have to think yourself, you have to keep yourself in the other person's shoe. Let's say you're the user. Let's say you are using this, reading this information, it is prepared by someone else. So you read it and see, is it making sense to you? If it's making sense to you, definitely it will make sense to your user. Okay, so you have to think like this and write answers. When you are practicing initially, in the exam it will automatically come. Whatever you practiced only will be shown in the day of the exam. So all these things, all these techniques you need to practice. So make sure when you're preparing for SBR, when you're learning standards and all, make sure that you study, you learn under a good tutor or something, lecturer, so that he or she will be able to guide you correctly on how to apply. Everyone says, okay, study the standard, you just need to know the standards, apply the standards to the case study, but no one shows you a demo how to actually apply the case study to the case study, the standard, and how to pinpoint the standards. Maybe on that I have to make a separate video, maybe a 1 or 2 weeks before the exam, that I will do later after I complete all my standards and questions. That's another thing, but no one shows you actually. So that needs to be done. Okay, so make sure that you learn under some good experienced tutor and all. Okay, and when someone says you, okay, do this, then you need to ask them, okay, show me. You write it and show me. So you have to actually do this. You have to tell them, you have to pressurize them that they show you. Okay, because I see candidates, they keep on struggling. Most of them, if you ask the tutor, they'll be like, just learn the status and apply to the, okay, apply how? The question asks how to apply. You need to be shown, then only you can do, right? So make sure that you do it. Okay, and for all those who are doing self-study, who does not have a tutor, lecture experience and all, don't worry, this video is for you people only I'm making, because I can understand that thing, that not everyone can afford a tutor. Okay, majority of the ACC students go through self-study only, so this video is for them. Make use of this video and share it with your friends. Okay, so now next standard is according to IFRS 13. IFRS 13 is fair value measurement. Okay, this fair value measurement, when you study, remember this standard comes in every standard, most of the standard, not all the standards, but At least I would say a 70 to 80% standard IFRS 13 is there, whether it's income tax, IS 12, whether it's your non-current asset, whether it's your intangible asset, whether it's your investment property, whether it's your what do you say, there are so many other standards. Okay, IFRS 9. So all the standards as part of IFRS 13 in it. Okay, so IFRS 13 you cannot skip. Okay, by hook or by crook you have to know IFRS 13. Okay, so according to IFRS 13, now you need to say, because you told fair value, what is fair value? So the next thing is, how do you go to the next line? IFRS 13 also has so many things. What are you going to talk? You are going to talk only about the fair value, how fair value is measured, what does fair value mean? You are going to define fair value. Okay, define fair value. That is your next line. So according to IFRS 13, this is the, what is fair value? This is the selling, because everyone does not know fair value. You always have to, when you write answer, you always have to think that you are explaining this to a child. Okay, think like that, you're explaining this to a small child. So break down the definition of fair value. What is fair value? Everyone will not understand. The common people will not understand if you say, okay, fair value. What is fair value? So here's the definition. Selling price of an asset in an orderly transaction between market participants. That means the price which I will get by selling this asset in the open market at today's price. That is known as fair value. Everyone, whatever age group they are, will be able to understand the definition of fair value. Now, if you say fair value, no one will understand. Some might understand, some might not understand. But if you say selling price of an asset in a transaction between market participants, everyone will understand. Okay, so this is the definition. I think I will highlight it, the definition for you. So this, see, when you're studying IFRS 13, okay, fair value definition you studied. This is the integration of your skills, writing skill plus your knowledge. This is what I wanted to show you through this. I apologize that I'm taking more time to just explain this 3 lines, because this sets the foundation for your rest of your answer. If you understood this thing, you will understand hereafter everything else, and I can proceed much faster. That's why I'm taking more time in the initial level. Okay. So the third line, the first, so this is, I'm sorry, the third line is your knowledge part from your textbook. It's the definition of fair value. This you understood. Everyone knows knowledge part. Everyone studied the definition, memorized, kept it ready. They know how to recognize and all. But the thing is how to integrate and how to, put together in an answer form. So this is the way. This is what I wanted to show you. All these things will not be explained in the textbook. Okay, this is the way, right? The answer, no, this is not there in the textbook. No one teaches you this in the world. This comes by practice, and also looking the demo and looking at the, if your teacher tells you that this is the way, then you can learn faster. So first you need to set it up in a proper order. Don't jumble it up. Okay, so you start with the correct standard. You identified IFRS 9. Then you told which aspect of IFRS 9? Only financial asset. Then you said financial asset recognized at fair value. Then you said fair value, what is fair value? Another standard, IFRS 13 says fair value is this, this, this. The definition you give. That definition only you learned in the textbook. So you see, and on that, the answer came up to 3 lines. Okay, so this 3 line is your first paragraph. First paragraph, you only identified the 2 standards and you told it is measured in this and this, the definition you give. That's it. That is only your first paragraph. In SBR, keep this as your first paragraph, the standards. So I will label this as first paragraph, number 1. Now let us go to the second paragraph. So second paragraph, you keep explaining now. Second paragraph, what do? And always keep aware, see the number of marks you are getting. Okay, don't write 10-20 points when the mark is only 6 marks. So second thing is link to the case study. So this is the second paragraph. Okay, second paragraph, if you see, this is what you are linking. Now you are using the figure, the number with the case study. Okay, because the definition, everything is set. We know what is fair value, we know what is financial asset, and how financial asset should be recognized. We all know that. Now link it. Okay, so Market rate loan attracts interest. So how do you start? It's easy. Just start talking about the interest. You have been given about the interest, no? So talk about the interest. Market rate loan note attracts interest of 6%. Okay, so the market rate was 6%. Okay, whereas the loan advance to the charity already attracts interest of 3%. You see, so so you begin by saying normal loan is 6%, but the loan to charity is 3%. Okay, you talk about the interest because that is the figure given to you. Then, so what happens because of this? As such, the price paid by teller of 50 million is not indicative of the asset's fair value. Price paid for 50 is not assess fair value. It's not indicative of assess fair value. Is it a fair value? Can you say it's an assess fair value? The 50 million which is paid. See what was the price of the loan. So the next point you talk about the price of the loan. You have to talk whether it's a fair value or not. Okay. When you talk about fair value, always you have to mention whether something is fair value or not. If something is fair value, you measure it at that only. You recognize it at that amount. If something is not a fair value, you need to find out the fair value by calculation. So in this case, this is not the fair value. This 50 million which you paid for the loan, is this 50 million the fair value? It is not the fair value. Why? It's very simple. Because the definition says selling price of an asset in an orderly transaction between market participants. So what is the market rate? It is at 6%. But you are attracting interest at 3%. So that 50 million, how can it be fair value? If you have used the normal market rates, 6%, then okay, I can say it's a market fair value. But this is not a fair value. You see, fair value means how it is, what is the price other market participants are also paying. That is known as fair value. But if the price is changed, reduced, or increased only for one participant, just for you, that price you cannot take as fair value. Understood? Like in this case, the charity, it's for charity and it's at 3% for you. So that 50 million cannot be taken as a fair value. That's why you said you need to write it. 50 million is not indicative of the asset's fair value. You see how you're building up? Immediately you didn't say that this is a fair value or this is not a fair value. You are building up. These are like the proofs you are giving. Interest is 3%, market interest is 6%. Therefore, this 50 million is not indicative of fair value. Now, next go to the next point. It's very easy. You need to determine the fair value. So the fair value of the financial asset must therefore be determined. Determined. You need to find out how. This can be achieved by calculating. So now you are answering this how here. Okay. This can be achieved by calculating the how you are using it. This one. This is the answer. Present value of all future cash receipts using the prevailing market interest rate for a similar instrument. Prevailing market interest you have to use. For a similar instrument, what is the market interest? Using that, you need to find the present value of future cash receipts. This is how you need to find the fair value. Okay. Because when you are giving a loan, what are you receiving? Cash, no? So you need to find cash, and it's for 3 years. They told it will mature in 3 years, redeemable in 3 years time. So you need to find the present value today. What is the cash you are going to receive in future, but what is the present value today? What is the value of those future cash receipts? And you need to discount it. So that's why you need the market interest rate to discount it. Okay, for the similar instrument. Okay, that means for this loan, what is the market interest? It is 6%, right? They told the market interest is 6%. So now comes, so you have explained, okay? You have explained, discussed in words. Now, third paragraph. Third paragraph, you are doing the calculation. So you are writing a separate paragraph. Always write a paragraph, not a paragraph, I'm sorry, subheading. When you are doing calculation, for that calculation, a subheading needs to be there. Because it needs to be understood what are you calculating, what is it? Don't just start calculating. Even when you get SBR answer also, I've seen most candidates without writing all this like this, how they have written, immediately they started calculating. No, it's not like that. First you need to write the standard, then you need to link to the case study, then you need to calculate, like how we have done 1, 2, 3 paragraph. So fair value of financial asset, that's what we are finding, no? Fair value, we have to determine. So fair value of financial asset. Third paragraph, when you see the subheading is not given in the case study, like how we have got for the first one, loan to charity. This you need to determine. This anything you can put. Financial assets, fair value of financial asset, Okay, so fair value of whatever you're finding out, right? Fair value of financial asset you are finding. So fair value of financial asset, keep it short, but it needs to explain what you're explaining. Okay, don't write lengthy paragraphs. Okay, your subheading should not be too long, should not be one whole line. 4 or 5 words is enough. Okay, so when you are finding fair value of financial asset, we know present value. So when we have to find the present value, always follow this column. It will help you. Cash flow, number one. Two, discount factor. Number one is cash flow. Two is discount factor. Three is present value. Follow this column. Okay, whenever you have to find the present value of cash flow. Okay, for how many years? Loan is for 3 years. Okay, starting from 2003, you have to pay interest. So 2003, 2004, 2005, 3 years. Like this, you need to put the year. Now, you need to put the cash flow. Discount factor is easy because it's 6%. 6% is the market interest rate. You're not using 3%. That's why 1 divided by 1.06, 1 divided by 1.06 to the power 2, 1.06 to the power 3. This is the formula for finding the discount factor. Okay. In case if you don't want to use this, you can use the table also. There's a table of discount factor. What is at 6%? But in SBR, you will not be given that table. I don't actually remember whether that discount factor table is given to you or not in SBR, but in AFM it's given for sure. So even if it's not given, at least you should know how to calculate manually also. In case if it's not given, you cannot rely on the table. So this is the way: 1 divided by 1 plus the interest rate, 1 divided by 1 plus the interest rate to the power 2 for the second year, 1 divided by 1 plus interest rate to the power 3 for the third year. Okay, this is how you calculate the discount factor for any discount factor. This is 6%, so 1.06. If it was 4%, it will be 1.04. Okay. It's always 1 divided by 1 plus the interest rate to the power number of year. That's the formula for discount factor. Okay. Coming to the present value, always write this. It's okay. It's in dollar millions. You want to drop down the millions. So for 2003, 4, 5. Okay. The interest we are paying. Okay. See, cash flow means what? For the loan, what do? We receive cash flows, no? We receive cash flows in what? Only the first 2 years we only receive the interest. See, we receive the value of the loan, the principal amount in the last year only with the interest. But first 2 years only interest. So what is the interest? And what is the amount of the loan? The amount is the loan is 50 million. So out of that 50 million, what is the interest? Say 6% is the discount factor. Okay. You cannot use 6% of 50 million. If you get 6% of 50 million, you're wrong. Because 6%, you're using it as a discount factor to discount. Okay, that you cannot use to find a present value. That is not the interest. Interest is 3%. 3% on 50 million. Okay, let me write it here. Why 3% of 50 million? Because interest, you have attracted interest at 3%, lower of it. Loan to charity, no? So only the so interest will not change, only the discount factor 6%. Discount factor only you have to use the market rate to find the fair value, not the interest. Interest will remain 3% only. The lower. So 3% of 50 million is 1.5. So first year 1.5, second year 1.5, third year 50 plus 1.5 because 50 is the amount of the loan with the interest. Okay, that's why 51.5. Now it's easy to discount. How do you discount? Multiply this by this. Multiply the first column figure, multiply with the second. Okay, multiply this by this, multiply this by this, and multiply this by this. 1.5 into 1 divided by 1.06. So you multiply and you get this amount. Okay, so add all this and this is your 46. Try to round up to the whole number, I would say. Okay, whole number. So this is the fair value of the financial asset, 46. Okay, it's not 50 million, it is 46 million. So now you're done with the calculation. Now what? Write it in the sentence form. Very simple. So the financial asset should be recognized at 46 million rather than 50. You need to write this. Okay, financial asset should be recognized at 46 million rather than 50. Not 50. 46 is the fair value just now we found. Write it. 50 million. Okay. Stop here. What is the next thing? How do you go? Don't stop with it. It's not enough. How do you go ahead? See, when what you have calculated is same as what is already calculated. Okay, this is another thing. Please note all these things down. Okay, because I'm not writing it, but since I'm saying it, so you can record it or you can write it down somewhere for your future reference. Because in between the question, I keep on giving tips and all in case later I might forget. So when it comes to my mind, I just say it. Okay. Uh, when this is not for this question, any question, but we need to apply in this question as well. When there's a difference in what you have calculated and what they have given, that difference needs to be adjusted. How are you going to deal with that difference needs to be told about. But when what they have calculated is same as what you have calculated is the same, then it's fine. Then that adjustment part is not required. But in this case, adjustment part is required because there's a difference. 50 million versus 46 million, 4 million difference. Where will that 4 million difference go? That needs to be talked about. Okay, you're understanding? So that is the next point. From here onwards, the next point is the 4 million difference. So the 4 million difference between the fair value of the asset and the amount of the cash advance. What is it? It is the difference of the fair value of the asset. That is 46 million versus the cash amount advanced. How much was the cash advance? 50 million. Should have been recognized as an expense in the profit. So it should be recognized as what? That difference. You should always write it should be recognized as this, it should be recognized as that, it should be treated like this, it should be treated like that. SBR is all about this only. Okay. So the difference should be recognized as an expense. Expense in which place? You need to mention the place also. Why? Consolidated statement of financial position includes both profit and loss and statement of financial position. If you want to show the impact, you need to talk which place it will go to. It's not enough that you just say it should be recognized as an expense. You need to say it should be recognized as an expense in profit or loss. In profit or loss. Profit or loss also will come in the consolidated statement, right? It's an expense. Okay. Next, the correct entry. So, next thing. Since you told it should be recognized an expense, correct the entry. Correct entry means journal entries. Okay, you can either say this should increase, this should decrease, or you could say debit credit. Okay, I would say debit credit is better because in almost all marking scheme I see debit credit. Okay, so go by the safe. So you and it's not hard. Trust me, debit. You when you know that this has to be increase or decrease, you know when to debit, when to credit, right? So the correct entry. Next thing you need to show the correct entry. You need to show. It's not that whether they asked me or not. Correct entry. Expense. Okay, say expense goes in profit and loss. So expense is debit. So debit profit or loss. 4 million. Where is it credited? And same, and always your debit should match with your credit. Okay, this is common sense. We know that. Okay, trial balance should balance. So debit credit should balance. Okay, if it's not balancing, you need to adjust your figure. You need to change it and see where's the mistake is. So if debit is 4 million, where will the credit 4 million go to? Which account it should be credited? Think. If you're confused in this case, you can make a T account. Okay. How to make? Let's see. See, this is financial asset. Okay. Our key thing is financial asset only. Okay. So financial, it's an see whatever asset, whether financial asset, whether intangible asset, whether non-current asset, any current asset, any asset we know always amount is debit balance only. So it was initially recognized as 50 million. That means it would have been recognized in the debit side. But the original amount is 46 million. That means closing balance, if you see it is 46 and 46 million, right? It should be 46. So this 50 needs to be brought down to 46. How can you bring it down? By debit. If you debit, it will be added with 50 and it will increase. You cannot reduce it to 46. So definitely that needs to be, the difference needs to be credited by 4. So if you credit the balance by 4, 50 minus 4, 46. You see? Now that your balance figure becomes 46. To bring it down to 46, you need to credit in the financial asset 4. So credit financial asset 4. Okay. Next, it's not enough with this also. I know for 6 marks it's lengthy, but this is ACCA. You can expect this. This is not some normal course. If you expect that for 6 marks this is too much, then think about the 12 15 marks question, right? So this is the last part. After that, we are going to second part of A. What is the next one? How do you go ahead with this? Hmm? Okay. Next is, we told that initially it is recognized at fair value. Next, subsequent measurement comes. Subsequently, you will be measuring it at what? Okay, so that needs to be talked about. That is the last part. When is a financial asset? So the financial asset is then measured at amortized cost. Under IFRS 9, you will get all this. Okay, once you understood IFRS 9, why it is amortized cost and all, it's not a question to be asked, because when you go through IFRS 9, you will understand why it is amortized cost. Okay, you have to memorize that table. You have to memorize all this. It should be measured at this, initially it should be measured, recognized at this, all those things with understanding, of course, but then you need to know it. So because why it needs to be measured at amortized cost, here also they are using the standard, same standard, IFRS 9 only. Okay, as per IFRS 9, comma. After that, you are linking it to the case study. Trailer intends to hold it, the asset, to maturity to collect the contractual cash flow. Why is it measured at amortized cost? The reason they are giving is asset is hold. They hold the asset till maturity to collect the contractual cash flow. That means they have the right to the cash flow. They're not selling the asset. Are they selling that financial asset? That loan? No. They're holding that loan till 3 years. In the case study we saw. So when you hold a non-current asset till the maturity, that means you'll be getting the cash flow, right? Relating to that loan, you'll be getting the cash flows for the 3 years, the interest with the principal in the last year. So what? So the principal says, IFRS 9 says measure it at amortized cost. If it is so, that is the business model. You're holding the asset. When you're selling the asset, that's a different thing. Then you measure it at some other cost. But here you're holding it. So amortized cost. Okay. Now, right, what's happening? So interest is credited to P&L using the effective rate. Interest is credited to which place? P&L using effective rate. And cash receipts reduce the carrying amount of the assets. This needs to be there in your answer. There is no other way that you can omit this part from your answer. Interest is credited to your P&L using the effective rate. Okay, there's a in IFRS 9, whenever interest is there, effective rate is also there. That effective rate is 6% only, the market rate. Okay, and interest is credited because you are receiving the cash. That means the interest you are receiving, the cash received is interest only what you are receiving. So that needs to be credited, right? When you receive something, interest received, it is credited, right? So credited where? P&L, because income is always credited in the P&L. So interest is credited to P&L using what rate? Effective rate. Now cash receipts reduce the carrying amount of the asset. So because the cash receipt, what happens? What happens when you are receiving the cash? That interest you are receiving, it will reduce the carrying amount of the asset. What is the carrying amount of the asset? It was 46. It was 46, right? Isn't it? So you can see in one place it is debiting, in the other place it is crediting. So debit and credit, it will increase and reduce the carrying amount of the, you need to find the carrying amount of the asset, because the question asked, the requirement asked you 31st May 2003, what is the amount of the loan to the charity? but you took the loan on 1st of June 2002. So what did we do all this while when we found the fair value of the loan? We found the fair value of 46. Look at this 46 we calculated previously, sometime back only, fair value. But that value was for 1st June 2002. That's why we talked all about this amortized cost and everything, because we want to find on 31st May 2003, after 1 year. The carrying amount we need to find out. That's why we are discussing all these things from here onwards. Understood? All these things till here, you were doing 46 million only. After this carrying amount, amortized cost. Okay. So cash receipts reduce the carrying amount of because you are receiving the cash interest. So won't it reduce the amount from your loan? It's like you are paying the if you are paying little by little the amount of your loan. So the amount which you have paid, that amount, okay, so your loan amount will be reduced by that amount. That means your loan amount is reducing. Little by little you are paying. So here also is the same thing. The cash receipts, the interest, because of that interest, your carrying amount of the asset means it's a loan. You have to think like that, it will reduce. Okay, finally, slowly at the end, at some stage, it will become zero. On 31st May 2005, the amount of the loan will be zero. Okay, so now make this column, it will be very easy. Okay, this you have to use when it's a financial asset, financial instrument. This will help you when you have to find the carrying amount. So interest credit, because interest credit, you will add it with 46. Okay, and you need to deduct by the interest, which is 1.5. Only 1.5, only for 2001 year only. That's why 1.5. Okay, and finally, this is the carrying amount 47.3 for 31st May 2003. This is what the question asked, but always when a carrying amount changes from 40, carrying amount changes from first year to the last year. Sorry, I mean from the current from the previous year till the current year. Okay, the change is there. Any kind of change is there from a for a carrying amount, that needs to be shown in a form of journal entry. You need to show debit and credit. Okay, so the cash receipt has been correctly accounted for. Okay, and the correct entry should therefore be, see, this 1.5, you don't have to worry about it. You have correctly adjusted it. You need to write it that you have correctly accounted it for. Okay, when we were calculating this, if you see 1.5, 1.5, 2002, 3, we showed here, right? In 2003, this was the cash flow. We correctly accounted it there. With the cash flow, there's no issue. The issue is with the interest credit. So now you need to correct the entry. What is it? The difference is only this amount needs to be the interest credit, because remember the interest was for 3%. That's why cash receipt is 1.5, but this is with 6%. So this amount needs to be adjusted. Okay, 2.8. Where will this 2.8 million go? We told it was credited to P&L before. 2.8. And always show debit first and then credit. Okay, follow that order. Debit credit is always debit first and then credit, not credit debit. So profit or loss 2.8. Where will the debit go? 2.8. Financial asset, because you see it's an addition, no? Financial asset was 46. Now you're adding 2.8 million. It will increase by that interest. You're adding extra with financial asset 2.8 because you have changed the from 3 to 6%. Okay, you see here it is 3%. You have increased the interest, so that 2.8, that difference needs to be added with financial asset. That interest credit, that's why that 2.8 needs to be added. Since it's a financial asset, so it needs to be added. That's why it's debit financial asset 2.8. Okay, so I hope with this you have got an understanding of first part of requirement A, and I know it's a bit lengthy, but then all this is needed for your proper understanding to set your foundation strong. So with this, now let me go to the next part. For next part is restructuring. I need to read the paragraph. From here onwards, I'll be going a little fast because I've already covered 1 hour. On just for a 6-mark question, I took 1 hour. Okay, so if I take 1 hour for each, this video will go more than 3 hours. Okay, so now I'll be going a little faster. I've set the foundation. From here onwards, you will be able to handle yourself. You'll be able to know when I say that this what means. This what it means. Okay. Restructuring plan. Trail has announced two major restructuring plans. Announced. Always when a restructuring comes, you need to note whether it was announced, what are the procedure they have done in the place, right? What are the steps they have taken for restructuring? All these things you need to note down. So, has announced two major restructuring plans. Okay, the first plan is, what is the first plan? To reduce its capacity by the closure of some of its smaller factories. That means selling of smaller factory, which has already been identified. Already been identified. Okay, to close small factories. That's the first plan. This will lead to the redundancy of how many? 500 employees will be redundant, and will have, and who have all individually being selected and communicated with. They have been communicated with. It's very important. Two things you need to know when restructuring is there. That it was announced officially, and the other thing is whether the employees who has been affected, who will be affected by the redundancy, are they informed? Are they communicated? These two things you need to see whether restructuring, for restructuring to be to take place, to recognize restructuring. Okay, if these two things are ideal, if these two criteria has been fulfilled, it's restructuring only. Otherwise, it's not. You don't recognize it. But here it looks like it is, because uh, individual, the employees who will be redundant has been communicated. One criteria has been fulfilled. The second one also they have announced, right, and it has already been identified that they are going to sell off the smaller factory. So it looks like, but we'll see more. Don't be too quick to judge. Another thing, read the whole paragraph until you make up your mind or a decision. Okay, this is the standard. It needs to be recognized like this. It has fulfilled. Okay, don't just read two lines and decide, okay, it is restructuring only, because they always know. Sometimes it might not be a restructuring. It looks like it's a restructuring. So the cost of this plan was how much? 14 million. Restructuring is also costly, okay? 14 million in redundancy cost and 4 million in retraining cost. So 4 million in retraining cost. There are two types of cost. 14 is redundancy, 4 is retraining. Because definitely when you restructure, sell off, and then when you need to retrain the existing staff. So the second plan is to reorganize the finance and information technology department using a 1 year period, but it does not commence for the 2 years. Over a 1 year period. Okay. Reorganize is the second plan. The plan results in 20% of finance losing staff losing their job during the restructuring. 20% staff losing jobs. The cost of their plan. So cost of the plan is 10 million redundancy, 6 million retraining. Okay, no entries have been made in the financial statements for the above plans. No entries has been made. Okay, when this statement is there, definitely then you have to make an entry. Okay, that means for restructuring part, whether the first plan or plan two, both of this, no accounting entry has been made. So you need to make the accounting entries. Now let us read. Since we have read the requirement, how this will be dealt in the financial statements. Just let me go through the length of the hours. Okay, this is. We'll see later at the last. So you have to see my video till the end of the video. Don't skip the video, otherwise you will not be able to understand how am I getting marks. Because the marking scheme, I always discuss it in the end of the video after I've covered up all the requirements. I've answered all the requirements, then I go through the marking scheme. Okay. Here also, how I have discussed for part A, provision for restructuring, subheading this. Okay. It's a provision for restructuring. Okay. What was the subheading in the case study? I think it was just restructuring. Right, restructuring plans. So you can write provision for restructuring, because restructuring uh, in the provision standard, there's a standard for provision. Restructuring comes there. Okay, restructuring is kind of like a provision. Okay, we do provisions for restructuring. So that's why the subheading is provision for restructuring. Tutorial note says, remember the criteria for recognizing a provision. Criteria. See, when it's a provision, there are some criteria that needs to be met before you recognize. You just cannot recognize anything as a provision. Same for restructuring also. It's a kind of provision. Okay, so all three of the criteria must be met before provision must be recognized. This is just Tutorial note is giving an idea what is being discussed in the answer. Okay, that means they're talking about which standard. Restructuring, you have to use IS 37. Same how we have done previously also for loans. We have used IFRS 9. Here we are starting with IS 37. You see, I can go a little bit faster now, right? So according to IS 37, what IS 37? Provision, contingent liabilities, and contingent asset. It's a provision. Three things IS 37 talks about. Sometimes the standard talks about more than one thing. Sometimes it's just one item. For example, IFRS 9 was just talking about financial instruments. But IS 37 talks about provision, contingent liabilities, and contingent assets, three separate things. So you have to identify that restructuring is a provision. Okay, form of a provisions only. That's why we are using IS 37. Okay, you might be thinking why IS 37 is not named as restructuring. No, nothing like that. There's no standard where restructuring name is there. Okay, the name of the standard is provision, contingent liabilities, and contingent assets. That standard only used for restructuring. Okay, so here it's simple. You have to say according to IS 37 how provisions are recognized. Why provisions are recognized? Because restructuring is a kind of a provision. So if you understood how provision has to be recognized, you will understand how restructuring has to be recognized as well. Understood? So a provision is recognized if you see here also recognize. The word recognize is always there in under any standard. The key theme of SBR is asking you in short conclusion. If I want to say what SBR is all about, recognition. How to recognize an item in the financial statements. That's it. So provision is recognized if three things. All the three has to be met. It's not just one of three. Because just read it. All three. Okay. All three. All three of the criteria must be met. Not just one. They didn't say one of the three. There's a difference between if they say one of the three must be met. That means if any one is met, automatically it's a provision. But if they say all the three has to be met, that means all three together. Okay. So what are the three? So when you're writing this answer, you can write the in bullet points like how they've written. Or different lines, no, even if you don't put bullet line one after the other, you can write the three criterias. Okay, you need to write the three criterias before you actually say that okay, this is a provision, so you have to recognize it, or this is not a before you say it's a provision or not, you need to recognize the criteria. Okay, and you need to memorize this. It's there in your IS 37. If you don't go through IS 37 to know the provision, how it is recognized, you will not be able to answer this question. So the first thing, there is an obligation from a past event. That means from your past event you should see that are there an obligation that there will be a cost relating to this, or I should recognize it. For example, I can give you an example of provisions. Let's say you are having a court case right now. Okay, so whether you will provide provisions for not or that, it depends on the case study. You will see that let's say you have 80% of chance of failing, so you have more than sure, right? More than 50%, so you're very sure that you're going to lose, even though not 100% certain. So it is something, it's a past event, right? Looking at the event today, you can predict in the future. So it becomes more it's like an obligation for you that there'll be cost on you. So you can recognize it. You need to recognize it in the financial statements. It's like that. So there is an obligation on the past event. Next, outflow of economic benefits probable. Outflow means it's a cost. Cash will go from your side. Third, outflow can be measured reliably. Cost can be measured reliably. You have to see whether they have given you some cost or not. So all three. Now, after this, what is it? How do you divide it in different paragraphs? It's simple. You have been given two plans. So both the plan needs to be dealt separately. Okay, the two plans are not same. So we are going to deal one plan at a time. Now we are going to talk about the first plan. Okay, always whenever they give you 2-3 plans or 2-3 scenarios or 2-3 things under one, you need to deal with each item separately. Okay, 2-3 plans also. So the first plan has been now you see it has been communicated to those directly affected, creating a constructive obligation to get expenditure on the restructuring. So it becomes an obligation now, constructive obligation. So look at the word they are using, constructive obligation. You have to use such words under IS 37, okay? To incur expenditure as on the restructuring. So because employees has been communicated directly, that means now it's an obligation on you that you have to incur this cost. You cannot say I'm not going to incur this cost. This costs are not an obligation. No, you have informed the employees. You have to do it. Okay. Constructive obligation on the restructure. So now you need to talk. You talked about the first plan also. Okay. Now you need to say how the standard is linked with the restructuring. You have given the 3 points about general provision. Now you are linking it only to the restructuring provision. So IS 37 says that cost can be only be included in a restructuring provision if they result directly from and are necessarily entitled by restructuring. Necessarily entailed by restructuring. If the cost is directly, you can say, okay, these are the cost of restructuring, or you can directly link it to the restructuring, then those costs will be included as a restructuring provision. That's what I-37 says. That's what you need to write. Okay. What are those costs? Remember, two type of cost you have been given. One is redundancy cost, one is retraining cost. You need to write both the cost, how each one of it will be dealt. Are they both under restructuring provision or only one of them? You need to write. So this includes costs such as employee. What type of cost does it include? Employee redundancy cost. Example. Okay. Expenses that relate to ongoing activities such as relocation and retraining are excluded. Okay. Ongoing activities. Okay. So only one cost will go there. Two cost was given. The amount is also given. One is retraining, one is redundancy cost. Redundancy cost will go as a restructuring provision, but not the retraining cost. It is excluded from that restructuring provision. Why? It's an ongoing cost. It is not something directly related to the redundancy. Understood? Because ongoing activities means it will keep on happening. Whether restructuring is there or not, retraining cost is there. Definitely. From time to time, you need to retrain your employees and all, right? But redundancy cost, it's directly you can link it to the redundancy. Because of you are making employees redundant, only you have to pay them cost. But retraining is not like that. Retraining could be for so many other issues also. If redundancy is not happening, if reorganization is not happening, it could be maybe a new technology came up. That's why you are retraining your employees. So you cannot directly link it to the redundancy. You see, that's why they are ongoing activities. That's why it is excluded. This is the logic behind I-37. So with regard to the first plan, now you are saying how the provision should be recognized. You see. So with regard to the first plan, a provision should be recognized. You need to mention, okay, when there are 2 3 plans given, you need to say for this plan this is what works out, for this plan this needs to be recognized. You cannot just say it should be recognized. What should be recognized? There are 2 plans given here, so don't confuse the examiner. Don't think that when you're confused you can play around with the examiner by just saying that, not making it clear which plan. Okay, here if you see the answer clearly, they say regarding to the first plan, provision should be recognized for the redundancy cost of 14 million. What was the amount? 14 million. So provision should be recognized for this 14 million only, not the retraining cost. As I told you in first part of A also, adjustment required. Debit credit, always give debit credit, okay? So provision we know is credit and debit will go to profit and loss account because provisions are there in the credit and profit and loss account as an expense. It's an expense only, no? So debit P&L 14 million, credit provision 14 million, okay? Next. Next is what? Simple. First plan is over. We have given the adjustments also. That means entry also. Second plan, right? Simple. Second plan. So in contrast, trailer should not recognize a provision for the in contrast means what? You can directly start like this, or you can say start by saying in the second plan they should be recognized or they should not be recognized, like that. Okay, we'll see. So or you can write like this also, in contrast. In contrast means it is something different to that, different to the first one. That's why they have used in contrast. So in contrast, trailer should not mention the name of the company always. Okay, this is a very good thing, good skill that you apply later early on the studies. Okay, mention the name of the company. That means this shows examiner that you are linking to the case study. This will give you marks. So trailer should not recognize a provision. Should not recognize. You should see. Don't leave something. If something should not be recognized, don't leave it hanging like that. Both things you have to explain. If it should be recognized, how it should be recognized, where it should be recognized. If it should not be recognized, why it should not be recognized. You see, you have to write like this. So then, if something is not recognized, don't leave it like that. That okay, it's not recognized, so I don't write it anywhere. No, you need to write it that it should not be recognized and why it should not be recognized. That also you need to write. So it should not recognize a provision for what? Finance and the IT department's reorganization. For reorganization, oh wait. For reorganization, there is no provision. Okay. Just not able to highlight it. I don't know what's happening with my. Just not able to highlight it. Okay, never mind. Okay, so I hope you can follow up with me and you can see that part. Okay, the reorganize. So a reorganization, you don't recognize a provision. Okay. I'm trying to highlight. Oh God, I don't know what's wrong with this. I'm trying to work out, but it's not happening though. Trying to highlight it a lot. Okay, never mind. So let us go to this one. Okay, so the reorganization. Okay, please note it down. I'm not able to. My pen is not working actually. I don't know what's wrong. I'm not able to highlight. Neither I'm able to underline anything. Okay, so I think there is some issue with my laptop. Okay, whatever. So the reorganization is not due to start from is not due to start for 2 years. Okay, why? Because the reorganization is oh finally the reorganization is not due to start for 2 years. It's not starting for 2 years. So how if it's not starting for 2 years, how can you say you recognize the provision, right? Common sense. So external parties are unlikely to have a valid expectation that management is committed. So now you're going to now you have told okay reorganization is not going to start from 2 years. All these things you are giving the facts from the case study only. Okay, now you have to talk about the external party. Remember restructuring when you're talking about you need to talk about external parties also who will be affected. What are their expectation? Are they expecting? Are they have they been informed? Have they been communicated? You need to talk about this in restructuring. So the next line is about them only. External parties, that means your employees and all, are unlikely. Okay, give in terms of probability when you're discussing provision questions. Okay, so external parties are unlikely to have a valid expectation that management is committed to the reorganization. Okay, it does not look that managers are so committed to reorganization. Does not look like. Okay, so these things what you are giving here right now, are you using your textbook knowledge? You are using both your textbook knowledge and you're using the case study and combining the two and forming an answer. This is the skill you need in ACCA level, at this level, P level. Especially in P level, it is highly used because at least in F levels, you have the support of MCQs and all to go through, pass. Even then, also, you need the theory part, but the section C, but here you heavily need it. You cannot skip because no MCQ to support you. Everything you need to write up like sentences like this. Okay. So once you understood this, the beauty of answering, the way you answer ACCA paper, whatever, no matter whatever paper you have taken is the same only. This solves a lot of your problems, and you start practicing on it in the time as early as possible. Solves a lot of issue. It's not nothing hard. It's not. Looks like it's very lengthy, and how will I write? How will I end? How do I know what is the next line? It looks like that, but trust me, you will know it with practice. It comes. You will know that when I read line, the next line will be this, next line will be the third line will be the fourth line will be the, then you build a paragraph, then you use subheading. Automatically, the answer is formed. Definitely, in the first day, it will not happen. You need to write, keep on writing answers. At least 70 to 80 questions you need to practice. If you are aiming for being aim to get some prize winner or to get ranks and all, world ranks and all. Okay. So it's about organization. Okay. So managers, they are not committed to reorganization. Okay. So it's committed to reorganize this. Okay, they do not have a valid, unlikely to have a valid expectation. The management is committed to reorganization as the time frame allows significant opportunities for management to change the details of the plan. As the time frame, that 2 years, no, they told 2 years will they will not start. So don't you think within that 2 years managers can change their mind? This is common sense. Okay, don't think about SBR now. Common sense only you think. When you are given long time to take a decision, it's very easy that during those 2 years you can change your decision. But if I tell you that you have to take decision by today, okay, that you have to reorganize. If I force you that by today you have we are reorganizing, by tomorrow we are taking actions, we have to do it. You are very unlikely you are likely to change your mind. You cannot even don't have that time to change your mind. You have to react to that. But longer time you are given, okay, normally only you take in a situation. The more time you are given, the more chances you have to change your mind. Because during that 2 years, you'll be getting more information, you'll be more aware, you know how the things are. You'll be better informed than you were when you decided that reorganization should go ahead. So that's why, because that time frame allows significant, see, they are told significant opportunity. They didn't say they will change their mind, definitely. Okay. Significant opportunities are there, no? Opportunities are great that they can change their mind. So managers, for the managers to change the details of the plan, they can change the details of the plan also, or even decide not to proceed with it. Yes, it's like an option you're giving. Remember, options you give, an option is up to you whether you exercise it or not. You can change your mind. Same like here also. So additionally, identification of the staff that will lose their job is not sufficiently detailed to support the recognizing of redundancy provision. The last, please mention the, please focus your attention on the last point, because some of you might argue that the cost has been given, redundancy cost, and they told that staff will lose their jobs. How many percent? Let us do the case study. Always keep on referring case study. It's very likely that you will forget, and it's normal to forget the information what you have read. Okay, restructuring, when I read, at least 20% of staff lose their jobs. They have told they give you the cost also 10 million and all. But still, in spite of that, you are not recognizing it as a redundancy provision. Why? Some of you might answer, because previously I have told you that staff are redundant. It's clear that they are redundant, but why are we not recognizing it? So here what they have told, additionally, identification of the staff that will lose their job is not sufficiently detailed to support the recognizing of redundancy provision. Yes, staff are losing jobs, but it is not detailed enough that that can support that, okay, because staff are leaving, it has been identified, therefore you need to recognizing it as a redundancy provision is not enough. Other things are also there. Okay. The whether they are likely, okay, whether some action has been taken for restructuring, okay, whether staff have been informed, nothing like that. It's just a probability that they this many of staff will lose their job. That's it. Only they have identified. It's not detailed. Okay. So with this second part of A also is answered. Okay. You see both I have clearly answered. Both plan 1 and 2. Okay. Under 1, redundancy is provision is there for redundancy, employee redundancy, but not retraining cost. And second part, no recognition at all of provision. Okay. Third, you have to make the extracts for equity section only, extracts. So when you're writing extracts, please mention your subheading should be what? Extracts. Extract. You need to write it extract. From the consolidated statement of financial position, please write the date, and it's a consolidated statement of financial position. Okay, write in dollar million. Now starting with what? What are you starting with? See, equity. Equity what? To the owners of the parent. Only the owners of the parent equity section you have to get. Then under that, share capital. Okay, so this is like the heading, because we know that equity, when you take equity, don't consolidate the parent with the subsidiary. No, 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 it's only the parent's equity that will go. Okay, because everything comes under the parent's hand. Okay, share capital, retain earnings, other components of equity, these three things will go in the equity section, and then NCI will definitely come. But for each of it, workings are required. You need working 5 for return earnings, you need working 5 for other components of equity, you need working 4 for NCI. Even though working 4 is before working 5, but when you present it, NCI comes down later. Okay, definitely NCI you must have calculated before calculated return earnings and other components of equity. That's why return earnings, sorry, NCI working is 4. But when you write it, you write it below other components of equity. You don't write NCI, then you write return earnings. No. Please follow the presentation the way they write, you also write it. Then finally add and write the total equity. Working. Working needs to be separated from your main table. Please see it. Okay. You are writing equity, share capital, return earnings, other components of equity, NCA, total equity. Then you are going to the workings. This how even in your real exam you need to write. Proceed. Definitely working you are doing first, and then you are writing the main table. But when you are showing it, you can keep some space. Okay, and then you write. You can just write the labels, put the headings, share capital, return earnings. The numbers you can put later after you get through the workings. This will show you how much of space you have to leave, because now it is on CP platform, so you don't have to think about leaving spaces and all. It's much easier rather than before when we used to do paper based. We have to estimate how many space we need to leave for our workings and all. Okay, so now let us go to the workings immediately. So okay, but before going to the working also, we didn't read the third paragraph, no, relating to the accusation of Park. Now you see how easy it is. I exactly know this piece of information I have read, and so I know how to link. If I have read the whole case study, I'll be very confused and too much of information, in your mind going on to retain and so. Because the moment I do the first one, go to the second part, I forget the first part. When I go to the third part, I forget what I do in the second part. It's like that. It becomes easy for me. I'm releasing some of the information what I've used, and I'm going to the next one. That means I'm with new information. Okay, so now I'm forgetting about my loan to charity, and I'm forgetting about restructuring. Now my focus is only on acquisition of Park. Okay, but obviously since I'm explaining you this, that's why it's going more than 1 hour. But definitely in the exam, all this thing have to be done at a very high speed for you to complete the paper. Acquisition of Park, 1st of June 2002, acquired 60%. It's a subsidiary. More than 50, acquired Park. Public limited company purchase consideration. So for cash, okay, for cash it is this one. Definitely cash and all they will give you how much they have purchased it for. First in 2002 fair value of, so they will give you the fair value of and net assets also. It is this. And retained earnings also of Park is 6. This is for subsidiary, they are giving you the retained earnings, okay. And other components of equity 55 million, not for the parent. For parent we have this financial statement given here, okay. But when you see here, one thing you have to notice is the information you are given about Park of share capital, retained earnings, other components of equity is on 31st May 2003. But this information you are giving is the opening balance. Okay, it is on the day of the accusation on 1st of June 2002. So please mention the date. Now, another thing, when accusation is here, when subsidiary is there, you always see that there are some adjustments made to the fair value. Every question has some adjustments to the fair value. So be prepared for it. So the excess in fair value, what fair value? Net assets. Is due to plant and machinery with a remaining useful life of 7 years at the accusation date. Fair value for plant and machinery. Depreciation is remaining useful life 7 years at the date of accusation. So at the date of accusation it is 7 years, but from 31st May 2003 you have to see. How many years? Because you need this for depreciation purpose. Okay, plant and machinery non-current asset, you need to depreciate it. It is the group's policy to measure the NCI at acquisition at its proportionate share of the value of the subsidiary's net assets. That is the second method. Okay, they will always give you, don't worry. NCI has two ways. One is fair value, one is proportionate share of fair value of the subsidiary's net assets. Two ways. So this is the second way. First method, if it's fair value, they will give you the fair value. Sometimes you have to calculate fair value, but it's pretty easy. Here, proportionate share. That means what is the percentage of NCI? 40%. Because they have acquired 60%, 40% is NCI. Out of the net assets of the subsidiary, 40% is for NCI. Okay, you have to calculate that way. Now, the goodwill of Park was impaired tested 31st May 2003. So, was impairment tested? The goodwill, okay? So, the recoverable amount, okay? So, definitely it is, there is an impairment in the goodwill. So, when impairment comes, okay, what else come? They will give you the recoverable amount. They will give you the recoverable amount. So the recoverable amount of net assets was 2083 million. There were no impairment of the net assets before this date. Before this date, there was no impairment of net assets. Okay. So equity section, for equity section, you need all this. Now let us go to this one. So now working one. Even though working one, you are not using it anywhere, but it's better that you have this group structure. Okay, how much Taylor is acquiring Park. If you want, you can omit this. If you don't want to include it, it's fine. Okay. As far as you remember that they have acquired 60%, if you don't include it, it's okay. Second, working 2. But from working 2 to working 5, rest all you need. Net assets. Working 2 is net assets, okay? Always calculate net assets before you calculate anything else, because even for goodwill, even for NCI, you need net assets. Without net assets, you cannot calculate return earnings, other components of equity, or NCI, goodwill, anything you cannot calculate. Your net asset is needed. So net asset is the first one. Now, if you are told about the fair value of the net assets of the subsidiary acquisition, then you can calculate the fair value adjustments using a balancing figure approach. Okay. You have been told what is the fair value of the net assets of the subsidiary at the acquisition, right? So you can calculate. The balancing figure will be your fair value adjustment for net assets. Okay. So this is the use this pro forma. Okay, standard format to calculate goodwill. One is at acquisition date. One is at the reporting date. REP means reporting date on the statement of financial position, the amount which you are seeing. Acquisition date, in the paragraph, the amount which they have given, those are at the acquisition date. Okay. So first is share capital, then is also what is the formula for net assets? Just add your share capital, other components of equity, return earnings, fair value adjustment is the balancing figure, and then the depreciation. Okay. So one by one we are going to do it. Okay. Share capital, if you see, will always be same at the acquisition date also, at the reporting date also. The rest all will change. Even the fair value adjustments will be same, because fair value adjustment was not recorded before. It was not there in the reporting date. So whatever is there in the acquisition date will be on the reported date also, 35. And depreciation will not be there in the acquisition date, because when you acquire, definitely depreciation you will calculate on the reporting date only. No, acquisition date, the moment you acquire something, that day itself you will not calculate depreciation. You will calculate depreciation after a year. So on the reporting date there will be depreciation, it will be deducted. Okay. Now let us go to the other components of equity, 55 and 80. So if you see, for share capital, if you see, it is this only, Park. Okay, 1210. But if you go to the retained earnings, it's 930. This will go in the reporting date. Okay, 930 and 80. But when you go to the acquisition date, you need here from here. From acquisition date, this is the closing balance they have already given you at the acquisition date. That this is the net asset. Okay, and we know the net asset at the reporting date also, that you can calculate it. So retained earning is 650 and other components is 55. Okay, at the acquisition date. So now I think you can understand this figure. Okay, 650, 850 and 80, 930 has been given. Next, fair value adjustments. Okay, so before we go to the depreciation, before we find depreciation, we have to find the fair value adjustments, because this 35 is used here also. That fair value adjustment, that's plan, no? Based on that only you are going to depreciate. So that amount has to be correct. Okay, so here just I need to before you go to the equity or the goodwill and everything, let me just go through. So this means, that means this has been given to you. That's why you got 35 as a balancing figure. Let us just still go through it. 1950, where we have been given that. Here, you see 1950. Fair value at the date of accusation, the fair value of identifiable net assets already they have given to you. So that means it has to be 1950. The balance is the fair value adjustment. Okay, 35, and they have told that for 7 years. Remaining useful life was 7 years, so 35 divided by 7 for depreciation. That's why 5. Okay. Next. So what is the change from 225? 2250 minus 1950. The difference is 100 million. There's a movement of 300 million. Okay. It increased by 300 million. Definitely it will increase. Okay. So of the 300 million post accusation net assets movement. Okay. Out of this 300 million post accusation, that means after accusation, net asset movement 25 million relates to OCI, other components of equity, and 275 relates to retained earnings. Now, you need to know when post acquisition return on net assets, how much it will go for other components of equity, how much of it will go to retained earnings. So they told 25 will go to other component of equity, 275, the 300 they are breaking it down, okay, will go to retained earnings. Why? Just look at other, see, share capital did not change. Okay, but other component of equity, if you see 80 minus 55, the difference is 25. And when you go to the retained earnings, okay, retained earning is how much? It is not 930 minus 650. Okay, it is 300. See, out of this net asset was 300. So out of this 300, 25 went to OCA. That's why you're deducting 25. The balance is for return earnings. Okay, of the net asset. You understanding? Or if you're not understanding it that way, there's another way of getting this 275. Just see this 35 also same, no change. Okay, when it's changed means no difference. So this depreciation, definitely depreciation will be deducted from return earnings only. Okay, so you deduct this 930 by 5. So it will be 930 minus 5 minus 650 at the date of the accusation, right? So this is 925 minus 650, same 275 only you will get, because the change in net assets came from two things. One is other components, one is return earnings difference. Only these two areas, the difference is there. Same only you will get 275 only. You have to get the same amount. Otherwise, how will you get the difference of 300 million, right? Now, third is goodwill. First net asset has to be calculated, second is goodwill, fourth is NCI. The order is like this only, it has to follow this order. Okay, just okay. So now let us go to the third one. Please put label like this. Working has to be put with correct number. Also subheading goodwill. So what is the goodwill is to be calculated so that impairment review can be performed. Okay, so goodwill It has to be there because once you calculate the goodwill only we know how much is the impairment. Okay. So the formula for the goodwill, we know it is fair value at consideration plus net assets, NCI minus fair value of identifiable net assets. So consideration, we have acquired it for this much. This was the cash consideration plus NCI was at 40%. What is the net asset? 1950. Okay, we have been given 1950. Which one? This 1950. This one at accusation. Don't take 2250. Don't take at the reporting date. Always at the accusation date you have to take. NCI at they have clearly written it also. NCI at accusation. So 1950. Then net assets. How much? Net assets acquired was 1950. Then goodwill is 80. Now coming to the fourth one, NCI. So there are easy marks available here as long as you know your standard working. When you know your standard working, what needs to be added, what needs to be deducted, you will get the marks. These are easy marks. Okay. So NCI at accusation, again at accusation. Okay. This is post accusation. This is impairment. So NCI at accusation is done in working 3, 780. When we calculated goodwill, we calculated NCI, this 780. Okay. You start with that. This is the basic format for calculating NCI. At accusation, what is NCI? Then after post accusation, what is the NCI percentage of net assets, right? So what was the net asset? Post accusation net asset. That means from reporting date from and the accusation, how much net asset increased? 300. And out of that only 40% will go to NCI, so 120. You add and then you deduct impairment. Impairment, see, because you have calculated goodwill, now you can calculate the impairment on that because you needed to deduct FINCI, impairment of other assets. Here also 40%. Okay. The reason why you are doing it this way is because NCI you are calculating using proportionate share. If NCI was calculated using goodwill fair value, then this thing was not needed. But because you are taking percentage share of NCI share of net assets, you need to take the impairment also. How much is for NCI? So 40% of impairment, working 6 is there to get this 167, the impairment. We'll go it to it later, okay? Or do you want to go through the working 5, which is return earnings, reserves, okay? Because in reserves only return earnings will go. Okay, we'll go through working 5 later. First, we'll finish with the impairment part, okay? Working 6. It looks like it's quite a lengthy thing. No wonder that it has been shown at the end. Anyway, let us go through the impairment first. Impairment of park. So in note 2 of the question, we are told the recoverable amount of the net asset of park. We have been given the recoverable amount. We need the recoverable amount because impairment, right? So we therefore need to compare this to the carrying amount. What we have to do? Compare the recoverable amount with the carrying amount of the net asset. Remember that goodwill has been calculated using the proportionate basis. This means that when performing an impairment review, the goodwill must be grossed up. Goodwill must be grossed up to include the NCI's interest. Because whenever you are calculating NCI, using the proportionate share of goodwill, sorry, NCI, you need to gross up the goodwill. Okay, remember this. If it's not the fair value. So here also, two workings you do. Goodwill we have calculated 80 in working 3. Always mention the working where you have calculated it. If the amount is calculated by you, next to it write in bracket the working number. That's enough. Don't calculate goodwill again. Come on. Okay, goodwill working 3. If it is already there in the question, no need to write working anything. Just write them. Notional goodwill. It is known as notional goodwill when you gross it up. Sorry, notional NCI. So goodwill was 80. Okay. How much it will be for NCI? 40 divided by 60. This is the ratio you have to use. Not 40% of 80. No. 40 over 60. When you're grossing up, it's like this. Why 40 over 60? Because NCI is 40, parent is 60. So NCI percentage comes up, balance goes down. 40 over 60, not 40 over 100. Okay. 80. So this 53.3. Then notional goodwill. You add both this. Okay. And at the reporting date, we have calculated in working to what is the net asset. It is 2550. Okay, 2550. It is this one. This one, not the accusation. So you need to know all this, when the accusation will go, when the reporting date and net assets will go and all. Okay. Next. So now what is the carrying amount of the asset? Basically you add, okay? You add the notional goodwill with this net assets at reporting date. Why we are taking the net assets at reporting date? How do we know it's reporting date? Where does goodwill go? Goodwill is a non-current, sorry, it's an intangible asset. Where does goodwill go? Goodwill goes in the statement of financial position. Where does your net asset go? The one at the reporting date, that is also there in the statement of financial position. That's why both needs to be added. That goodwill is a part of an asset. It needs to be added with the net asset at the reporting date because that goes in the statement of financial position. That's why you are adding both. And here, hence this is the answer. Once you add 133.3 with 2250. So total carrying amount of asset minus recoverable amount has been given to you as this. So since carrying amount is more than recoverable amount, definitely there's an impairment and this is the impairment. The difference of the recoverable amount with the carrying amount. Next, it's not enough, you need to write more on it. Okay, how much of it will go to whom? How did we get 167? So this impairment is firstly allocated to the total notional goodwill of 133.3. This, see, impairment, when you do impairment, we should know that how impairments are allocated. It is allocated first according to IS 36. Okay, there's a rule, there's a separate standard dealing with impairment. Impairment is dealt under IS 36. So under IS 36, impairment is firstly allocated to goodwill. Total notional goodwill of 133.3. You see the goodwill? Yes. Total notional goodwill 133.3. Always. It's always against goodwill and then against other assets. However, only 60% of total notional goodwill has been recognized in the statements and therefore only 60%. So only 60% has been recognized because 60% we have acquired. So that's why only 60%. 80 of the impairment is accounted for. Because 133.3, if you take 60% of it, it will be 79.98. Take the round figure, 80 million. Okay. Only this much of it of the impairment will be accounted for. This expense is all attributable to the owners of the trailer. It will go to, you need to write it. This expense will go to whom? Owners only. All of it will go to the owners. Because already it is 60% only. So 60% is for the parent. Right? There's no such proportion. It will this much because this is not fair value. Okay? Whatever is, it's for the parent. Now, impairment is 300.3, but only 133.3 has been allocated against goodwill. What about the balance? So next, you need to talk about the balance. The remaining impairment, which is this, okay, this minus this, is allocated against other assets. In proportion to their carrying amount, you need to write this. Not just allocate. In proportionate to their, not any asset you wish. You have to allocate according to their proportion in the carrying amount, okay? This impairment loss is, and all it's not, and you don't have to find this thing. How much it is for the other assets, find the proportion. No, it's not asked, okay? Because you have not been given the other assets. So if you waste your time to find out, it's not given. Other assets are not given to you. So don't waste your time. You have been only given the extracts from the equity section and all in the statement of financial position, okay? That's why you don't have to find out. If you were given the non-current asset, other assets, then you would have to show it. So this tells you, if you're given a piece of information, you have to make use of it. If you're not given that piece of information, don't break your head doing it. Okay? So don't allocate against other assets because other assets have not been given to you. What are the other assets? How will you know? It's not given. It's not required, so don't waste time. This is enough. This impairment loss is attributable to the owners of the trailer and the NCI based on the respective shareholdings. Okay, so this impairment loss. Okay, how this impairment loss will go? Owners and the LCI based on their respective shareholding, 60 and 40%. Okay, this is all it is. So now we know how you got this 167. Only this will go. Okay, this is the remaining impairment after you have allocated against the goodwill, 167. So only this impairment 167. Oh, sorry, where was I? Yes, so out of that 167 remaining goodwill, 40% will go to NCI. That's why you're taking in the NCI part 66.8 you need to deduct. Okay, so I hope this tells you how you got the NCI. This is the NCI. Next is reserves. Okay, so for reserves, any adjustments to the estimate of profit or loss will impair retained earnings. You see, you need to understand. Next, so trailer. First trailer will go. Trailer is who? Who is the trailer? Parent. Parent is the trailer. Park is all the other things is for subsidiary. Okay, this is like a standard format. Please follow this format when a question has been asked on the retained earnings. I've been continuously talking for, I think it's going to be 2 hours soon, so that's why my voice is little shaking. Okay. After this, I have more videos to upload, so yeah, you can understand. Right, in a day I have to do 2-3 questions, otherwise I will not be able to cover up the syllabus. Right, because for September session, for the SBR session, at least my plan is by the mid of August, all the videos has to be there. Division kit as well as the standards. So yeah, I hope you can understand my situation. Okay. Okay, so rest all is for subsidy. It's like parent plus subsidiary. Okay, when you're taking the retained earnings, you take the parents' retained earnings completely 1 to 40. Let us see 1 to 40. The very beginning, this 1 to 40 parent. Okay, next it's not just 1 to 40 plus 930. It's nothing like that. Okay, we have done so many things, adjustments and all. Part B is quite long. Okay, that means another hour will go, I guess. Where was I? Okay, so 1 to 40. Now, park you will only take for working one. Okay, 60% of 275. Okay, working two means they are showing you how they got 275 in working two. On that only 60% because for parent, only for the subsidiary. You are not taking the NCI part here. Okay, because NCI has been measured at good proportionate share. Whenever it's like this, we take 60%. So 275. Okay, 275. How much is the 275? Is the retained earnings? Yes, isn't it 275? Just now here I showed you this one, right? 275. So from this 275, 60. Post acquisition return earnings you are taking, right? Then impairment of goodwill working 6. Okay, impairment will be deducted. Okay, we saw 80 because what is going for the parent? 60% of that impairment. Next, we have the impairment of other assets. Okay, so impairment of other assets is 60% of 167. Okay, so this one is 167. On that also 60% you have to take. Okay, financial asset write down. Okay, you have to take the information from the other two parts also, remaining two parts, previous two parts. Okay, for the third part of it. That's why you see first two parts and second part also. That's why I say it's linked, interlinked. Always when a question has a requirement has many parts, for example, part A has 3 parts, all the 3 parts are linked to each other and needs to be answered in that sequence, in that order. Okay, so financial asset write down. How much? 4. This 4 comes from where? Go up and go behind my video and check. In the very beginning, when I was doing part A, we got that 4 difference in the fair value. Remember 50 and 46? That 4 is coming here. Because we told debit profit and loss account and credit financial asset. That's why debit profit and loss account deduct 4. It's an expense. Interest credit was credited, that means you add 2.8. Restructuring provision, we did a restructuring provision. Provisions are deducted, expense, so 14. And finally, this is your retained earnings. Now coming to the other components of equity. This is just an extract, okay? So these are workings, okay? Other components of equity, only 2 things. One is trailer. Trailer fully will come. how we have done for return, then for the park. Okay, please mention the name. Park is the subsidiary. First, the parent plus the subsidiary. So subsidiary, other components of equity in working two, we saw only 25 million. Out of that, only 60% for the parent. That's it, 50. So add both and 140. Okay. All this figure what I have circled just now will be put together here and be written in the extract format. Here. You see? Now you can understand this. Now you can understand this, and this how we got. Okay. So we are done with that. Now we'll go to part B. Part A is completely over all the three parts, and part B is impact of measuring NCI at fair value. Okay, let us see, even though we didn't read the 4 lines, but before going it, we'll just at least read the tutorial notes. When calculating goodwill in this part of the question, you will not be penalized for any mistakes that you have made in part A. You see, if you have made mistakes in calculating goodwill in part B and you have carried it forward to part B, you will not be penalized twice. Only once you will be penalized when you made that mistake in part A. But that mistake amount you brought to part B, second time you will not be penalized. It's like you are never penalized twice for the same mistake. That's a very good thing ACC is doing. Otherwise, imagine how many marks you might have lost. So remember that goodwill calculated at the fair value does not need grossing up when performing an impairment review. Yes. The good thing is, that's why I like fair value more than this method. When goodwill is calculated using fair value, sorry, the NCI, then you don't have to gross up the goodwill. Okay. That's what part B is about. But I have got an understanding what part B is about, but we didn't read the requirements. We need to read it. NCI at fair value. It is the trailer's policy group to measure their acquisition and its proportionate share of fair value of the subsidiary net assets. The directors of trailer have used this policy for several years and do not know the implications, if any, of the accounting for the NCI at fair value. The fair value of the NCI, so they have given you the fair value of NCI, 800 million. Now, for 7 marks, okay, explain to the directors with suitable calculations. So, explain also, do calculations also. The impact on the financial statements if goodwill arising in the acquisition of the park being calculated the fair value of the NCI. If the goodwill was based on fair value of NCI, definitely goodwill will change when the NCI policy changes. So, what will be the impact of that change on the financial statements? Okay, that you need to explain. Okay, my voice is breaking. Okay, it's like going down. I'm like losing the energy, but never mind. Right, okay. So goodwill calculation, same formula. Fair value will remain changed. Goodwill fair this time NCI will change. The fair value of NCI you have to use, and fair value of identifiable net assets at acquisition same as before. Working to goodwill is 100. Before I think goodwill was 80. I remember. Now it's 100. It increased. Now the goodwill impairment comes. So goodwill is 100. Net assets at reporting date was how much? You have to add both this to find the carrying amount. Okay, net asset at acquisition reporting date was this much. Carrying amount, recoverable amount remains the same. This is the impairment. Impairment changed. So out of this, it's easy to say which one is for allocated for goodwill and others. So goodwill is 100 and others is definitely 167. The balance of, okay, the impairment 267. Together, this will be 267. You see, total is 267. Now, this is quite okay. Go a little bit fast. So under the previous method used by trailer, the NCI was recognized as a share of the subsidiary net assets and so did not include any goodwill. The full goodwill method, okay, this is also known as full goodwill method, okay, when the fair value of NCI is used. Most of you might not know it. The full goodwill method means that the NCI and goodwill are both increased by the goodwill that relates to NCI, okay. So goodwill will increase here. You see 80, it increased. That relates to NCI, it will increase. Both NCI also increased, goodwill also increased by the goodwill that relates to NCI. Linked to the park. In the case of park, measuring NCI is fair value increase the goodwill arising at acquisition from 80 to 100 million. We saw before it was 80, now it's 100. The figure used for NCI under the proportionate method was 780. This was the NCI. But it has increased by 20 million. How? Fair value was to 800. So goodwill also increased by 20. NCI also increased by 20. Okay, to 800 at 1st of June 2002. Now, it's in different paragraphs. Okay, I hope you'll be able to get it now. So now the full okay, the full goodwill method increases reported net. It will increase, definitely it will increase the reported net assets. Okay, the full goodwill method, and so any impairment of the goodwill will be greater. So even the impairment of the goodwill will be greater, because impairment is based on that goodwill. If your net asset increased, net asset minus recoverable amount is only impairment, no? So impairment also will increase. So it does in case of park. You cannot leave the impact. If that increase has impact on, let's say, 4 5 areas, all the 4 5 areas you need to discuss in your answers. Whatever the place the impact is on, you need to discuss. Let's say here the impact is on net assets, therefore the impairment, the goodwill, every area needs to be discussed. You cannot leave any space untouched. Okay. So in the case of park, impairment of goodwill will be 100. This will be charged to 60 to return earnings and 42. So goodwill impairment is 60. Out of this, 60 will go to return earnings, 40 will go to NCI. Because 40%, no? 40% of 100 and 60% of this. So 60% of it all will go to the parent. That's why retained earnings. The impairment will be deducted, no, from retained earnings in the, and 40 for the NCI. Under both methods, impairment of other assets is, say, under both methods, if you have noticed, impairment to other asset is 167 million, which is split between retained earnings, and even this is split between retained earnings and NCI. Okay. You have to show the impact. That's why you're showing the impact only. Okay, that this will increase this. So impact means what? It will increase amount, this will decrease this amount by this much. That is the meaning of impact. Okay, negative impact, positive impact, like that. So all the machine NC at fair value may prove difficult, right? Goodwill impairment testing is easier under full goodwill method, isn't it? Goodwill impairment is easier under full goodwill method. This is because there is no need to. This is because there is no need to gross up the goodwill. You can write this. Definitely, you can write this as an impact. It's a positive impact that you have to gross up. Now we are done with the full all the requirements. Now let us go to the markers. Okay. First one was for 6 marks, so 3 3. It is divided equally. If you see, most of the time in SBR it is divided equally. Discussion versus calculations. Okay. For discussion, 1 mark per point. That means 3 points you need to write to get the 3 marks. What was the question? Loan to charity. Okay. Next is for 5 marks, 1 mark per point. That means 5 points you need to discuss. What was the second part? Reconstructions. Restructuring provision. Third, it was for 12 marks. Okay. Now we'll see the breakdown of the 12 marks. So 1 mark for the share capital, because extracts, no, there's no working for the share capital. You just take the parent company share capital. That's why it's only 1 mark. Wherever working is not required, 1 mark. Wherever working is required, more than 1 mark. NCI is 2 marks because working is required in NCI. Even though a lot of working is required, but only 2 marks. You see, return earnings is 4 marks because more workings are required in return earnings. We saw the adjustments. Fair value adjustments, 1 mark. Okay, because it's just a balance. Goodwill calculation, 1 mark, because goodwill is also is easy. You just put the number and got the answer. Consideration plus fair value of net NCI minus fair value of net assets. Okay. Goodwill impairment is 2 marks because first you need to calculate goodwill, then you need to allocate with the goodwill and other assets. That's why 2 marks. Then we have other components of equity, 1 mark only. Coming to part B. Part B is for 7 marks. 4 marks is for discussion only, NCI discussion. But it's 1 mark, that means 4 points you need to write. Okay. When you are writing 4 points, you can write the 4 points in 4 separate paragraphs. Okay. 1 mark is just for the goodwill calculation, because again you have to calculate goodwill to show that it increased from 80 to 100. Then even impairment also you have to calculate, which is 2 marks. Okay. Definitely impairment will be more because you have to first calculate impairment, then you have to allocate also. So that's why 2 marks, and the total is 7 marks. Okay, so that's how you are getting the 30 marks. So this is not a very hard question. Then this question is question 10, as you can see from here. So with this, I have finished question number 9, and see you in the next question, question number 10. Till then, take care.